Welcome to TradeTheABI.com. This is John. This report is for the 6th of January, holiday here in Europe for the Bafana, but regular day for everyone else. So we talked about the magenta needing to cross back above, did so cleanly, and intraday was pretty clear. We were looking at this discussion here where we were talking about our 50K chart and how looking for that orange dip below that 7.5 is always a turnaround recovery spot, and sure enough, that's exactly what we got as it took place. And decent right back above the 50%. So, everything's pretty much in line. We're not seeing any hyper dramatic behavior. It was just year end, and now we're back to normal cycle. And of course, events of the inauguration. Of course, now they announced that Trump gets sentenced for his whatever you want to call that show trial on December 10th, conveniently right before the inauguration. Of course, you had also, Jimmy Carter being laid to rest. So there's a lot of little things going on. But of course, there's a big snowstorm right now in D.C. And of course, the vote is supposed to get certified today. We'll see if that one takes happen. That's a little add into it, but from a market standpoint, just waiting for significant economic readings, and nobody's really believing that we're going to get any reliable data until things shift after January. So you're pretty much stuck with, the perception, and the perception is as long as they're giving numbers that everybody likes, no worries. Except for the bond market's not quite agreeing with that, as you continue to get rise in rates, and that is going to be a strain to the market going forward, because at a certain point it catches up. And the problem is this one: oil continuing to rocket, and that just puts added pressure on going in further. It's just another cycle of you know maybe not as accelerated inflation, but it still keeps it up, and it's still going to keep the growth of it at some relative move beyond what the Fed's target rate is. And as long as that's the persistent case, you've got a malaise of moderate in between growth. Um, they stepped in to save the euro here as it dropped into that 102 range, but it's still going to continue to fight with it. It is a turnaround move. There's just not enough wonderful things to say about the EU zone and where they're going with things, but does not look good for a lot of the individual countries, not to mention the political turmoil that all of them are going through right now. From a gold standpoint, should be doing better than it is relative to everything else, but again, too easy to play around with it, simply because so much of it is traded in non-physical form, and as long as you're able to do that, it's just like having futures markets. Power is moving in back again to the crypto, though, because again, this is where you get that discrepancy between like a gold and an independent source here, because it's not tied to uh, any kind of derivative setup. I mean, yes, you have the futures here, which we talked about that a while ago when it was having its early rise back in the 40 and 50,000 range, and it makes a difference because it allows people to be active within it from a long and a short standpoint without actually having to own a Bitcoin. So not really same with ETFs, and that's why they're so popular, because you're effectively getting exposure to it without actually having to own the thing, and the whole reporting and difficulties that go with being active in the crypto zone. So uh, fairly healthy, good ratings from everything. You do have a little bit more of a short increase taking place, but you've got a complete reset of the shakeout, and you're starting back up again. So it could be a whole nother cycle. And of course, the optimism is going to grow as you get closer to the inauguration. Um, it's also been a nice boon here for ETH, slightly behind, but I have no doubt that it'll catch up. There'll be a lot of positive articles, this, that, and the other, but it's just nonsense. It's pretty straightforward to see from our readings. Behaves pretty much exactly like all the others, so can't object to that. When we look at it from our current intraday situation right now, well, EU session is doing beautifully. Simple and clean. But when we go back to Friday's action, it was just pretty much early morning started the pump. Once we get to the open, there was a little bit of softness, but straight call buying all the way through. A nice start to the year. Nothing special. It was a huge one from last year, so will it be able to maintain that? Unlikely. Once the real data starts flowing through, there's going to be so many adjustments that it's going to cause a lot of havoc. Will it ultimately affect what the multiple is for the market? No, inflation is going to determine that, and uh, still don't see it tamed. The question will be whether the Fed will be cooperative or counter to Trump, in which case you could see not so much softening. I don't know that they have much choice with the deficits that they're running, and like we talked about before, if there's budget cuts or anything like that, it's going to pose all sorts of difficulties. So we'll just follow the readings as they come. As always, anything relevant, I'll put in the Skype chat for you. Have a good one. Trade well.